Good morning. This is Daniel Cheung. I'm with Aviation Tax Consultants. Thank you for taking the time to join us today for this webinar. Elliott Aviation, our friends at Elliott, is hosting this webinar, hopefully to give you guys some information that could be helpful to you for tax planning purposes for the remainder of 2020, and maybe buying a business aircraft this year can make sense for you and your company in terms of income tax benefits and so forth. And I will go ahead and give a little bit of introduction about what we do at ATC Aviation Tax Consultants. We were started back in 2003. Now I have an office actually sitting right here in Scottsdale Airport. If you guys hear some airplane taking off in the background, that's in a way, hopefully that's the signs to come. Things are kind of restarting, hopefully around the country where you guys are also. Airplanes are taking off and people are back flying. Anyways, what we do, I'm a CPA by trade, so what we do is income tax planning primarily. There's some sales and use tax planning opportunities depending on where you live. And our role is to work with you and your advisors, tax advisors, who may not deal with these airplane issues on a regular basis, and we come in, provide you some guidance in terms of structure and setup and maximizing the tax deductions. So this is what we do, and certainly appreciate the invite from Elliott and our friends at Elliott. I've been working with these guys for a long time. Certainly I love to help these guys out in terms of getting some good information out to the marketplace, to you guys. But I certainly do have some ulterior motive. I'd like to get on Todd's good side because, I like to play golf, but I'm a pretty high handicapper. So usually I don't get an invite from Todd because I love to play with him at his suburban Minneapolis golf course sometimes. But hopefully this will help you guys and get me an invite to play golf with Todd down the road. Anyway, I'll turn it over to Conrad and Todd with some comments.
Good morning. Thanks for taking the time to join us today. My name's Conrad Theisen. I'm the Director of Avionics Sales here at Elliott Aviation. I've been with the company for 24 years in various roles and responsibilities, and continue to grow our avionics knowledge and customer base in the avionics industry. A little bit about Elliott Aviation. We're an 80-plus-year-old company founded in 1936. We have branches in Eden Prairie, Minnesota, Des Moines, Iowa, and Moline, Illinois. Our two facilities in Eden Prairie and Des Moines, they have full FBO services, maintenance, and avionics support as well. Our Moline facilities are headquarters and is our one-stop shop. Some of our MRO capabilities are FBO services, maintenance, airframe capabilities on the Hawker, Hawker Line Citation, Phenom, King Air, Challengers, and many others. We offer paint, interior, accessories, engineering to include many STCs and engineering support as well for third-party vendors. Parts, last but not least, we're a worldwide leader in Garmin retrofits to include, we've done over 350 King Airs with the Garmin G1000 cockpit, completed more than the rest of the world combined. We have also completed 30 Beach Jets, 400A, Hawker 400XP with the Garmin G5000 suite, and now have completed over 12 and have more in the works for the new Citation XL XLS G5000 cockpit. We also offer many Wi-Fi capabilities and options as well to meet your individual needs. Call anytime for details on those. And thanks for taking the time in your busy schedules and joining us today. I'm going to turn things over to Mr. Jackson.
Good morning, everybody. Thanks for joining. My name is Todd Jackson. I've been with Elliott coming up on 24 years. I'm the VP of Aircraft Sales and Acquisitions. The Elliott Jets group is a division of Elliott Aviation, and we're a full-service aircraft brokerage and acquisition company. We also acquire and inventory airplanes for resale on our own. We do about 10 to 12 of those a year. We'll accept trades. We have a licensed appraiser on staff, and we have consistently been in the top 10 worldwide number of transactions. We'll do 50-plus transactions annually. So we've become very experienced at it. We got a great group of people in our department, and we're here to help. So if you guys have any aircraft acquisition, sales needs, desires, feel free to give us a buzz. And with that, I'll turn it back over to Daniel.
Thanks, Todd. I will go through a PowerPoint presentation here, some of the slides in terms of these are the topics of discussion today. We'll keep it pretty high level. Some of these are really not exciting topics other than the tax benefits are real and maybe something that gets you over the fence in terms of maybe buying the airplane this year despite maybe the economy not being as good as we hope, and our business may not be as good as we hope. The topics are income tax planning, talk about who may qualify for these tax benefits. We'll talk specifically about the CARES Act. There's a provision that may really generate some interest in your situation in terms of some tax benefits available, even including getting some tax refunds back from as far back as 2015. Sales and use tax planning, buying an airplane is no different than buying a lot of things at the store. There is typically a sales and use tax exposure, and there are some planning opportunities to help you legally get around some of that liabilities. And then I'll have some closing remarks. The primary focus of who can qualify for these benefits are business owners. At the end of the day, you have to have a business and also a need to fly for your business, whether to manage different locations or sending your folks to meetings, trade shows, conventions, and whatnot. The tax code is not friendly, unfortunately, to W-2 earners or retirees. For example, clearly, if you have retired, you're not working, you're not flying for business, then these tax benefits may not apply to you. Also, with W-2 earners, the tax code is just treat them differently than business owner or sole proprietorship. So for the most part, our focus is on airplane owners, whether it's big multinational companies, C corporations, or a lot of our clients these days are S corporations and LLCs. So those are the focus of who can qualify for these benefits. Bonus depreciation is really the key tool in many of our planning with most of our clients really. Bonus depreciation was introduced way back in 2001, unfortunately, after the 9/11 events. Same situation in terms of Congress tried to stimulate the economy in terms of encouraging spending. And it had gone from 30% to 50%. Then as of 2017, with the Jobs Act, we now have 100% bonus depreciation available. And for the first time ever, it does apply to both new and pre-owned airplane. Historically, only brand new manufactured airplane from manufacturers are qualified, but now you can buy a pre-owned airplane. So for the last 2-3 years, again, it has really stimulated a lot of interest in airplane acquisitions, and with the rec fact situation, the right needs for your business. A business aircraft certainly is a business tool to help you manage and grow the business in addition to the convenience. And now with this age of pandemic and so forth, maybe it is not so much a perk anymore because there's more necessity to send you or your folks in your company to travel safely to conduct business. There are a lot of other tax provisions that we address as we do our planning, some of those including hobby loss, passive loss, or personal use. Clearly, most of our clients certainly do have some personal use, and with properly managed personal use, it's not an issue. So some of those are part of the planning in terms of discussions with you and your advisors in terms of how best to structure the airplane acquisition. At the end of the day, what I like to call is a smell test. For example, I get calls from a family doc a lot, and they have a clinic where they see patients about a 10-minute drive from the house. Doesn't matter how much business the family doc does, if they only have one office location, it'll be impossible to justify a business aircraft, for example. But if you now open a second or third office that is maybe 300 miles away, 3-hour, 4-hour, 5-hour drive away, now having a business aircraft to travel between locations will now satisfy the smell test. So some of the situation, depending on your business and how you operate, and we can certainly sometimes have to think outside the box a little bit in terms of justifying the airplane. But if you run your own business, there's some leeway as to how you utilize the airplane and hopefully can get you meeting some of these requirements. Just a quick comment on audit risk. It's not unusual for you or your advisors to tell you, buying an airplane is a big audit risk, and you'll get audited and you lose and you'll pay back all the taxes. Clearly, I don't believe Congress passed all these incentives with private business airplane owners in mind. That's not what they thought about when they passed these incentives. But certainly, with the right tax situation, business aircraft is no different than any equipment that you may purchase in your business. I always say it's no different than a laptop to help run the business. It is simply a business tool for a business. With the right structure, the audit risk in our experience in over 17 years of doing tax planning for strictly airplane owners, the audit risk certainly is overstated. And so that's kind of part of our job, is to make sure that you don't step into some of the landmines out there and draw attention to your return unnecessarily. The CARES Act, that's the newest incentives that were passed by the Congress about, probably a month and a half ago now. Net operating loss carryback, that's what is being reinstated by the CARES Act, and it is effective until the end of this year. So for 2020, the remaining of 2020, the carryback provision can create additional incentives for airplane purchase. The primary scenario that we need to achieve for 2020 tax year is that you have to generate a loss. Whether the loss is from just operations or from buying an airplane and taking advantage of 100% bonus depreciation, for example. If a loss is created in 2020, you can potentially carry that loss back as far back to 2015 to create some tax refund opportunities. Obviously, everybody's tax situation is different, but the law certainly allows that carryback provisions to be applied. And depending on your specific situation, whether it's 15 or 16 or 17, those are the detail of planning. It applies again to any business entities, C corporations, which we don't see as much these days. Most of our clients are individual pass-through entities, S corporations, LLCs. So in terms of where the application of these rules of the carryback is applied, it is actually on the personal tax return, 1040 level. So if your 1040 in 2020 creates a loss because of the down economy, the business is down this year, that's the opportunity available. Now, if you're doing well, some businesses are still thriving in this environment, then maybe you'll just realize all the tax savings immediately in 2020, which is perfectly fine. But if you do generate a loss in 2020 tax year, the carryback provisions really is a peculiar rule. Most of us write a check to IRS, that money is gone forever. You seldom have the opportunity to get that tax payment back. And these rules were actually eliminated back in 2017's Jobs Act, because it really does cost the Treasury money. When you apply for these refunds, they have to issue a tax refunds to you. So that's why in the short term, in the next few months until the end of the year, by creating a tax loss, then there's no easier way to create a tax loss if you have the need for a business aircraft and taking advantage of 100% bonus depreciation. So this is the kind of the meat of the incentives that could be available to your situation. And we'll go through a few examples now based on some hypothetical numbers. This is a light jet example that we put together. Let's just say your company has a decent year, make a couple $1 million in taxable income before the airplane acquisition. And if the decision is, hey, buying the airplane now makes sense to position your company for the growth and the rebound of the economy, well, you go out to buy a $3 million airplane. Assuming 100% business use for these example, you can qualify to take 100% bonus depreciation on this airplane purchase in 2020. So by subtracting $3 million from your taxable income, now you create a tax loss of $1 million. We're just using some general 35% tax bracket as an example. So you eliminated the 2020 taxable income from $2 million to zero with this acquisition. So you immediately save around $700,000 in income taxes on the federal level. Now, the excess loss, which is $1 million, is potentially qualified to be carried back to 2015. So depending on how good your year was in 2015, this loss can mean another 35% of refund, which adds together is over $1 million in tax refund on a $3 million airplane purchase in 2020. The timing of these certainly is not immediate. It will probably be about this time next year when you prepare your 2020 tax returns. When those are filed, the refund claims can be filed, and then the refunds will be issued. The 2020 tax savings is pretty much immediate. If you are small business owners, you are used to making quarterly tax payments, for example. You may even stop making those payments if the game plan is to buy an airplane, because chances are with the 100% bonus depreciation, you can eliminate or reduce your taxable income and tax payment requirement dramatically. So the cash flow is real. The 2020 savings could be achieved immediately by stopping your quarterly payments that is due in June, September, and so forth. So that's kind of what we're talking about. The next slide, the next two slides, actually there are 4 more slides in terms of examples. Really, it's a similar scenario. When you're buying a bigger jet, a medium jet here, maybe your company is doing better, can afford a bigger airplane and need a bigger airplane. The application of the law is the same. You create a loss in 2020, you eliminate the taxable income in 2020, and then the excess losses are carried back as far back to 2015. The tax code does require you to start the refund process to 2015. You cannot just say you just jump straight back to 2019 and get the refunds. You have to apply the loss first to a 2015 return, and then 16 and 17 until the loss is fully absorbed by previous year's income. So if you maybe have a startup company back in 15, 16, and you didn't actually pay much taxes or any taxes, then the application may be applied to your 2017 or 18 tax years. Any loss not carried back will be allowed to be carried forward. So, or you can actually even make an election not to carry some loss from 2020 to 15 and just elect to carry it forward. So that's available also. The next slide is a heavier jet, a bigger jet, similar scenarios. The numbers are bigger. Here we are using some conservative 35% tax bracket. I think most of us between federal and state probably pay a little higher than that. So your tax savings will equate to your marginal rate, what you pay. State income tax, just a quick word on that. You know, there are 50 states out there. With the states that have state income tax applied, some of them do not accept bonus depreciation. So you just need to double check with your CPA whether the state allows bonus depreciation or not. If not, then you'll still depreciate the airplane over the regular 5-year period for a 91 operator, for example. The next 2 slides are modifications and maybe avionics upgrade. Those 2 qualify in terms of bonus depreciation. 100% deductible, and whether it creates a loss, it just depends on your specific situation, but if it does, it works the same way as buying a new to you airplane. Modification, upgrades, and engines, any of those things do qualify and get to utilize the depreciation rule, 100% bonus depreciation rule. And this one is also another example in a bigger project in terms of improvement. So those are the specific examples we put together. It's kind of to illustrate what the potential tax savings are available to you. Next, we will go ahead and talk about a little bit of sales and use tax planning. Again, there are 50 states out there. Many states actually are favorable nowadays, don't have sales tax. If you live in one of those states, very nice. For example, New York doesn't even have sales tax anymore on airplane, Montana, Oregon. Some of those are the common states that you hear in terms of, hey, those are great states to buy airplane in, which is true. We get those questions quite a bit in terms of sales and use tax. Hey, what if I just close in Oregon? Does it mean I don't owe anything? The answer is yes, you don't owe anything to Oregon because they don't assess sales tax on aircraft or anything for that matter. But sales and use tax planning or as liability is assessed based on where the airplane is, where the airplane's hanging. It's not so much where you individually live. If you happen to live across the state line or hang the airplane across the state line where you live, where the airplane is hanging, your primary domicile airport, that's actually the state that you have to be concerned with in terms of what is taxable and what's not taxable. We do have clients that will base the airplane, for example, in Illinois. They are somewhat notorious in terms of how thirsty they are for tax dollars. So in Illinois, there's not a lot of exemption available. So a lot of our clients will actually base the airplane, whether in Gary, Indiana, or in Kenosha, Wisconsin, for example. So where the airplane is physically hangar will dictate what is taxable and what's not taxable. And some of the planning available are literally that, just choose an airport that is more favorable in terms of tax law and sales and use tax laws. And property tax is the same way. Some states do assess personal property tax on the airplane, and that's also based on where the airplane is hangared. Some of the exemptions, these are very common exemptions in terms of sales tax planning. The general comment is, before you write a big check to your state, you certainly should explore whether some of these exemptions apply to you. Rental and leasing is a very common strategy we utilize. It's an internal leasing exemption. You spread out the tax and pay it over time. It's much better in terms of cash flow, and instead of writing a check up front, you should be able to allow, depending on your state, you should be able to spread it out and pay it over time. Some other states, for example, California has the most favorable sales tax exemption really in all 50 states, really, is an interstate commerce exemption. Any business aircraft that has interstate business reasons to fly the airplane, they should pay zero sales tax to California. So that's a couple other states also have a similar exemption. Commercial use is charter. If you put the airplane on the charter certificate for public transportation, that could qualify for exemption. Some other states will offer what is called a casual sale exemption. If you're buying an airplane from a private party, some states will actually exempt that from sales and use tax assessment. In closing, again, I ran through these pretty quickly, really try to give you a taste of what's available out there in terms of the marketplace and what the tax benefits being available. If, you know, in the market to look at buying an airplane this year, replacing what you have currently, with the right tax situation, the additional tax incentives that is available from the CARES Act or just bonus depreciation hopefully may get you over the hump and make some decision accordingly. And what we do here at ATC is we don't prepare your returns. We work with your advisors and come up with a structure, and we kind of bring some expert knowledge on some of these best practices, how to structure the airplane, how to document the flight log, and so forth. And a lot of times we'll work with you on the early planning basis in terms of the structuring. When you're planning the acquisition, certainly there are some opportunities to help you maximize the deductions. In that, I'll turn that over, and I should have mentioned there's a Q&A button that you should be able to ask some questions. Certainly we have plenty of time to answer some of your specific questions. Thank you. Yeah, got a question on recapture of depreciation. If you currently own an airplane that is fully depreciated, there will be a recapture when you sell the airplane. That's a general depreciation rule and what we call the recapture of depreciation. So let's just say, it doesn't matter what you originally purchased the airplane for. What's important, the formula is what the sales price is, less the remaining tax basis. That would be the gain. Let's just say you paid $3 or $4 million for a plane, but now it's worth $2 million. And you have taken $4 or $5 million depreciation previously. The airplane is fully depreciated. If you sell it for $2 million, $2 million will be taxed as what we call the recapture. It's a gain recognition. So 1031 used to be available for aircraft, what we call like-kind exchange of properties, but the Congress also eliminated that provision in the 2017 Tax Act. So to continue to delay the depreciation or the recognition of the gain, you'd need to be considering buying another airplane within the same tax year. For example, you sell your current airplane, but you buy the next airplane at $5 million, then you may be able to generate a new $5 million depreciation. That will create the tax incentives that will offset the gain that you have to pay when you sell your current airplane. And I'm pretty sure this the webinar is being recorded, so it will be available online, and Andrew and the folks at Elliott will probably email that out. And my presentation also could be, you can certainly just email us and we can get a copy of that to you.
Yeah, the video will be posted on YouTube and other social media as well for any review.
Yeah, got another question in terms of the CARES Act. For our discussion today, we were focused on the 2020 tax year. However, the CARES Act actually does apply to 2018 and 2019. So the net operating loss carryback provision for you or your clients that happen to buy an airplane in 19 or even 18, it does apply. So if you have a taxpayer that bought an airplane in 2019 and by taking 100% bonus depreciation, if that creates a loss, that loss can be carried back from 2019 tax year to 2014. 5 years carryback allowed. So if, again, obviously we cannot create a transaction for 19, but if you happen to be in that position that you already bought a plane in 2019 and you meet those requirements in terms of the loss being generated, that loss can be carried back. And it goes all the way back to 2014 initially, and then 15 and 16. Another question is business use percentage. Good question. The examples we were using today is based on 100% business use. Generally speaking, any expenses for any equipment, including aircraft, is deducted based on business use and personal use on an annual basis. Some of the planning ideas would be, hey, what if we really focus on utilizing the aircraft in 2020, 100%? Then you capture 100% bonus depreciation with 100% business use. So everything spent, including expenses, operating costs, and so forth, and depreciation can be deducted at 100%. Now, going forward in 2021 and forward, it doesn't mean you can just stop flying the airplane for business. No, it does not work that way. There needs to be a continuing illustration of the need for the airplanes for business travels. 50% is somewhat of a deadline, black and white number that you need to focus on an ongoing basis. So as long as you don't drop below 50% business use in the outgoing years, you don't have to repay the depreciation until you sell the airplane. But in terms of planning purposes, some personal use is okay. There are different ways to minimize the cost of personal use. But generally speaking, if you maintain 50% business use, you qualify to take these accelerated depreciation. But in order to maximize your depreciation and deductions, obviously, the answer is to have as high a business use as possible. Another question that I got is about modifications and so forth, and how it applies. The depreciation deductions, typically the term we use is called place in service. So it's not just a matter of signing a purchase agreement or putting down a deposit or even pay for the aircraft. If you happen to be buying an airplane that requires a lot of work, and if it is not ready to fly by December 31st of 2020, you really cannot begin depreciation until the airplane is ready to go, and what we call place in service. So whether it's improvements on avionics or upgrade to other systems, or buying an airplane, if you wait till the fourth quarter or wait till December to say, hey, let's buy an airplane. If there's any delay in terms of getting the airplane ready to go, whether it's pre-buy or whether it's financing and so forth, you will risk not able to take advantage of the deduction. So December 31st, the airplane or the improvements and so forth has to be ready and placed in service before the deductions and depreciation can be taken. So in terms of planning, and in fourth quarter traditionally is the busiest time for our industry. What happens is, you ended up with a pretty good year, and your CPA tells you with the projections come April 15th, you'll a bunch of tax payments. So a lot of times people will scramble towards late in the year how to get around, how to reduce their income. Again, there's no better way to buy an airplane with the high cost of acquisition. So in terms of planning, you certainly need to look ahead. And if you think you may be in the market and need an airplane, and depending on the model, and some even new airplanes, production are limited and down from prior years. So certainly put all that into consideration in terms of when you start your search and planning.
Thanks everyone for joining us today, taking the time out of your busy schedules. If there are no further questions, we're going to sign off.
Thank you, everybody.